Hello and welcome to Livewire Markets reporting season coverage. My name is Chris Conway. Today I'm having a conversation with my old running mate, Henry Jennings from Medicus today. Henry, it's great to see you as always. Thank you for having a chat about what has been a big week of reporting season.
It has been a big week. I call this the killing season, Chris, I have to say, because we do see company after company being absolutely taken out the back and really taking it very, very hard. And this week, I think we've seen some serious damage done to one or two blue chips out there, and we're going to get onto those in a minute. But yeah, it's been an interesting first week to say the least. And bear in mind that usually the first week's kind of the better week. As we head towards the tail end of the reporting season, it usually tends to get worse. So interesting times.
I literally had on my notes here, Henry, like you and I sat together for a few reporting seasons when we were working at the newsletter together. I was going to ask you, do you remember seeing so much carnage this early in the season? But you've already answered the question. So yeah, it's crazy.
It is crazy. And, August last year was absolutely manic in terms of volatility. But I think, we are set to sort of break records in terms of volatility. 30% movements in blue chip stocks is quite extraordinary on the back of numbers. You do wonder what the analysts are doing, and you do wonder what the IR people are doing in terms of massaging expectations, but maybe that's a conversation for another day.
Quite possibly. Let's get into some of the results, Henry. So CSL, we've got to start with the big one. I know you've already shared your thoughts on this one. Your commentary got some feedback, shall we say, on the Livewire platform. Lots of people who are long-term holders, so this is an emotive one. But I did want to ask you, CSL was at one stage the pinnacle of corporate excellence in Australia. Every acquisition they did was great. They had an unblemished record. Do you think CSL is a bit of a victim of its own prior success?
I think there's a lot of reasons for the demise from their blue chip status of CSL. I think the rot set in when they bought Vifor, which, to be honest, they paid way too much for, and that was already under threat from generic iron deficiency drugs as well. So it's not been good since then. I think that was kind of the pivot point, and we may have got to the low in terms of investor sentiment against CSL with the unceremonious retirement, resignation of Paul McKenzie, which was, handled pretty badly, I have to say, in terms of when that was released. And then they followed it up with kind of, the 1-2 punch from Mike Tyson in terms of the results themselves, and the stock now languishing, at $154 odd. So it's come down a long way, and the multiples are not exactly extreme anymore. So we have seen that those multiples of old become more reasonable. But you look at whether there's light at the end of the tunnel, new man on the job. Can we see any light? I still see headwinds rather than tailwinds. So I think it's still an avoid from me. We don't hold it. We haven't for some time. I did look at it for Livewire because, it's an $85 billion company. You can't avoid it. And at some stage, we may want to hold it. But, just because you don't hold something doesn't mean to say you shouldn't look at it.
Henry, I'm going to be somewhat bold and try and lump Car Group and Pro Medicus in together. I know they're two completely different stocks, but I think the irony here is that investors are stressing about the impact of AI on these businesses, even as both companies are looking to, or already are in the case of Pro Medicus, implementing AI. So what do you make of the results and those worries around AI? As we were talking about offline, bouncing around and decimating different sectors at different times.
Well, it does seem at the moment, Chris, as if, especially in the US, we're picking on, or the investors are picking on different sectors every night to smash. Last night, it was the logistics sector in the US. Car Group results weren't bad, I have to say. Strong interim result, which wasn't the same as Pro Medicus, I have to say. Pro Medicus was propped up to a certain extent by their investment in 4DX, which I seem to remember was about 38, 39, 40 cents, something like that, and became a 10-bagger, and one that we jumped on board after that deal with them taking a strategic holding. So I think the two beasts are somewhat different, but the theme is the same in terms of disruption to an existing model. And I guess, to some extent, we saw this back in the late 90s when the internet started to gather pace, and those companies, the old school models like the Fairfaxes and the Rivers of Gold with the classifieds, were disrupted, were killed off by the likes of Car Group, by the likes of Seek, by the likes of REA. is this the now we're going to see these models, which have been around for a long time, killed off by AI? Maybe there's a delicious irony there. Somehow, after 25 years odd since the dot-com crash, that these models are now themselves under threat from AI. I can't get excited at the moment about Pro Medicus. It is still quite lumpy in terms of those contract wins. I think Car Group and I think the whole sector generally in the AI space is going to continue to be very much sentiment driven, and the sentiment is very much against it. I don't know what the catalyst is to change that, but at the moment, every time you look above the parapet and think, oh, these are looking cheap, they just get cheaper. And there's no doubt that Pro Medicus is a market darling, but the numbers weren't great.
Let's talk about another company where the numbers weren't necessarily great. AMP down 26.6% yesterday. I hesitate to say this, but is this just a long-time dog with some new fleas?
Well, it's not a great way for poor old Alexis George to go out on, is it? Passing the baton to Blair Vernon. It wasn't a great result. Reset of revenue margins in the platforms. It is trading at a big discount to its 3-year average forward PE. So that is something. And it did probably get absolutely whacked yesterday. It has bounced a bit today and probably deserves a bounce today. It was probably overdone yesterday. But I think, as always with the AMP, it's such a tricky one. They've had so many issues. They now have a new CEO. It is trading below NTA, and there's good bits of AMP. There's bad bits of AMP. But the banking side of things is not not without competition, and we've seen that with the results from CBA, ANZ, and Westpac to some extent. So I think it probably got overdone yesterday. It probably is due a little bit of a bounce, and it is seeing one today. But I think it's still got issues. A new man at the helm. Maybe he can turn the good ship AMP round. But it wasn't a great way to go out for poor old Alexis George.
Let's pivot to something that is performing well, and that is just about any company in the gold space. Let's focus specifically on Northern Star. Copped an upgrade from Citi this morning, as I saw. Evolution as well. It seems like these guys are just making hay while the sun shines. It's one thing to have a surging gold price, but operationally it seems like they were excellent. What was your take?
I think, my take was just the amount of cash these guys are throwing off. It is extraordinary. The cash pile. They are making hay while the sun shines, and they've been in the wilderness years for some time. And we see the gold spike higher and everyone gets excited, and then the gold spikes lower and everyone gets really distraught about it. But the main takeaway, I think, is that it's higher for longer. The longer it stays at these elevated prices, the more these guys can benefit from it. And I think that was evident in those numbers. Good to see the dividend being upgraded as well, so that was good. And for gold bulls, this is one of the one of the bedrocks of the gold bull side of things. And it's it wasn't a bad result, it wasn't a cracking result, but it does show how much cash these guys are throwing off, which is extraordinary. So it's, for me, it's just higher for longer. The longer the gold price stays higher, the more attractive these companies are. The issue is, what do they do with all this cash? And in the past, they've kind of frittered it away on stupid purchases. But certainly there is a little bit more fiscal discipline this time round, I suspect.
That's the history of mining, though, isn't it, Henry? These managers get over their skis and make a silly acquisition. They get the big checkbooks out and buy something, and then it all rotates the other way.
Oh, it's not just the history of mining, Chris. I mean, it's the history of all corporates. The market wants growth. The CEOs look around at how they can grow their company, whether it's whether it's Northern Star, whether it's AMP, whoever it is, and there's organic growth. That takes time. The market's fickle, doesn't like to be patient these days. They want something now, but that comes with risks, as we've talked about with CSL and Vifor. That does come with some risks.
Henry, let's talk Temple and Webster. I've got no idea what to make of this one. Down almost a third. Well, I'm keen to hear it, but down 33% yesterday. The CEO was talking about positioning the business for growth, not profit. Well, that seems to have worked. what did you make of it?
Well, I've got to say, Chris, last August when they came out with a set of numbers, I scratched my head and looked at it, and it was a $3.8 billion company making a profit of 11 million bucks. And they talk about the total addressable market being massive and all this sort of stuff. Fine. But when you compared it to the likes of Nick Scali, JB Hi-Fi, Harvey Norman, it was a joke. And I did write in the newsletter that I thought that this was massively overvalued, or JB Hi-Fi, Harvey Norman, and Nick Scali were massively undervalued on the same sort of metrics. They managed to top that with the even more bad news yesterday, because for a $3.8 billion company before the fall, they made just 5.8 million bucks in profit. Now, they loved the slides of lots of big numbers, percentage increase of active people looking at the thing and thinking about buying a sofa. All those sorts of things look great, huge percentages. But at the end of the day, I'm a Jerry Maguire kind of guy. Show me the money. If you're a $3.8 billion company making $5 million in profit, there's something wrong. And the market has come to realize that it's not a $3.8 billion company. It's a $1 billion company now making $5.8 million. So it's probably getting back to more of a reasonable price, especially given they've got a big cash haul as well in the price. I think it's about 160, 170 million bucks in cash. So that is going to offer some solace to investors. But, it's great to talk about total addressable markets and how big, if we could only get 1% of the 100 billion that's spent on furniture globally, we're going to be a massive company. Well, the margins are down. It's just really, it reminds me a lot of Satire, but at least with this one, it's got more cash and maybe it's got a bigger addressable market than luxury goods. So for me, I'm steering clear for the time being. The sirens are calling in terms of valuation, but I'm steering clear of this one.
Lots of excitement there, Henry. Let's turn to something that's a little bit more boring. IAG, insurers, mixed first half result. Premium momentum was the key there. What were your takeouts from that one?
Again, a very disappointing result in some respects. They downgraded gross written premium growth and insurance profit guidance. So, that's not particularly good. The dividend was flat as well. It's not expensive at 15, 16 times earnings. So it's not the end of the world. But clearly, we've seen this week this assault on the insurance sector as well, which, I was scratching my head over. The insurance brokers, the insurance sector got hit because of the new app Insurify, which is out in the US, not here, by the way. We've had Compare the Market for a long time. This isn't new stuff that they're bringing out, but certainly it's a very competitive market for insurers. You only have to switch on and watch the wonderful Olympics, Winter Olympics at the moment, to see how competitive it is. Every second ad seems to be an insurance company. And, certainly it is a competitive market out there, that's for sure. So, I think with IAG, it has had a somewhat of a slippery slope at the moment. I can't see that slippery slope being changed in the midterm. So again, it's not one that catches my eye, although I guess at some stage there will be some value. But for now, I'm happy to just watch from the sidelines on that one.
Last one, Henry. James Hardie up 11% on its results. Obviously had a interesting 2025, shall we say, with the shareholder backlash and the acquisition. But it has rallied from November last year to now. It's gone from $24 to $38. So it finally seems that the ship is steadying. What did you make of it?
Well, I think to be fair to James Hardie and the management there, they've always done a pretty good job in managing what can be a pretty harsh macro environment. Last year, of course, they shot themselves in the foot with that AZEK, the decking and siding company that they bought. They shot themselves in the foot there with investor relations massively, and we did get that massive sell-off down to 24, 25 bucks. As always with all these negative kind of sentiments, they ultimately wash through if the business is going well. And to be honest, the business was beat expectations, so that was good. And as I say, management has done a good job in what they can control. So that is good. So the better performance in siding and trim and deck, always good. Rail accessories as well, beating our expectations. Balance sheet leverage is being delevered as well. And we are seeing, the beating in terms of expectations. So that is good. There was some news out in terms of the US on the macro front last night on the US housing market. faltering supply and weaker consumer confidence. But that what they can manage, they're managing well, and that negativity from the takeover last year and all the corporate governance issues is in the rear view mirror to some extent. So I think this one is one of the winners, if you like, from the reporting season so far. We haven't had too many, apart from CBA and ANZ, but this one very much in the kind of the tick of the winner category, beating expectations. The market liked the result, and coming out of that steep sell-off because of the takeover last year, I think this has got probably more momentum to the upside.
Henry, just to round out with a couple of things, big focus being on the share price moves. I think that is what's dominated headlines, like you said at the top, these 30% moves that really have rocked a few investors. Have you taken anything out of the outlook statement? So not necessarily at a company level, but I know you read the outlook statements religiously. Has there been anything that stood out across the board, so to speak?
I think currency for one, the Aussie dollar. Certainly that is a factor in some. It was a factor in the Cochlear result this morning. And I think, generally the outlook isn't too bad for corporate Australia, but maybe our expectations are too high. And certainly, the volatility is massive. And I think that's not so much just a function of the company's reporting, but it is a function of what the market is doing at the moment with the algos and the hedge funds, and just the computer trading searching for any sign of weakness, and you only have to show a small chink in your armor and suddenly you're attacked like a bunch of rabid hyenas. So I think that's certainly the predominant feel at the moment. I mean, you look at the tech sector at the moment, which has been absolutely decimated. WiseTech down another 13% today. I was just actually looking at Mari Isaac sold her shares. She sold 10.2 million shares a little while ago, a couple of years ago, back in December 24, for over $1 billion. Now that's probably worth $400 million, and Richard White bought them. So it's not been his best purchase. But I think generally reporting season so far, apart from the banks, has been disappointing, despite the fact the index has been hitting towards record highs, which I scratch my head and look at some of the share price. You think, how is that possible? But I think generally, reaffirming of guidance has been one of the themes. The AE dollar has been another one of the themes. And I guess the effect of artificial intelligence and how and why and where they're using it in their business to either cut costs, which means cutting people, or to speed up processes.
Henry, last one. I know we've got a lot of reporting season ahead, but is there anything in particular that you're looking forward to next week?
Sleep. No,
That doesn't come until March, mate.
Yeah, that's true. That's true. I think just generally it's going to be it's going to be another interesting week, to say the least. We're going to get another Super Thursday. I think the big focus is going to be on the bombed out stocks that are heading into their reports absolutely in serious trouble, the likes of WiseTech. That I think is going to be interesting. Also seeing some of these resource stocks. We've got BHP coming up as well. That to some extent is known because of production reports, but we've got the banks out the way, which is good. We've got Macquarie out the way, CSL, ResMed. We've got some of the biggies out the way, but I think there's still an awful lot to come. It'd be interesting to see how retail's doing as well, given we've seen the rise in rates. And I must admit, Chris, I was scratching my head because I read this morning that barbecues galore had gone into administration. Now, in a country that worships the humble Barbie, it seemed a crazy thing that barbecues galore was in administration. But certainly retail land out there, and we've seen it with consumer confidence numbers, it is not necessarily a happy place. And I think that's going to be quite higgledy-piggledy in terms of reports. So the likes of JB Hi-Fi are going to be interesting as well to see how they're faring.
Henry, it's always a pleasure. It's been both insightful and entertaining. So thank you so much for sharing your insights, mate. I always appreciate having a chat.
Thanks, man. Cheers.
If you enjoyed that conversation, make sure to give it a like, and don't forget to follow our YouTube channel. We're adding lots of great content just like this every single week.